In exercise 3-5, we're going to see what happens when we fail to make adjusting entries. So let's read the information given to us. Telling us during the course of your examination of the financial statements at December 31st, for the year end, December 31st, 2024, you came across several items that needed further consideration. Currently, the net income is $100,000. So what we'll do is we'll start out by writing what the net income is before any adjustments were made. Now let's go to the four items and see if in fact there is something that I need to do or all is well. First is an insurance policy that covers 12 months was purchased on October 1st, 2024 for $24,000. $24,000 for 12 months is $2,000 per month. The entire amount was debited to prepaid insurance. That part is correct, but no adjusting entry was made in 2024. So at the end of the year, December 31st, we have October, November, December, 3 months worth of insurance coverage we received. To that extent, we should have recognized an expense and decreased prepaid insurance. A journal entry should have been insurance expense debit, prepaid insurance credit. If we had done that correctly, then my insurance expense will lower my net income number. So I'm going to put minus $6,000. 24,000 for 12 months is 2,000 per month. 24 divided by 12 is 2,000 per month. 3 months have passed. October, November, December. So 3 months of insurance. When I do the adjusting entry, my net income is going to get lowered. Let's look at the next one. During 2024, the company received $4,000 cash in advance from a customer for services to be performed in 2025. The 4,000 was incorrectly credited to service revenue. So we have received monies in advance. We've not done the work as yet, but we already called it service revenue. So we included that as service revenue, therefore increasing my net income. Now what I know is this is actually unearned revenues. And when I make the adjustment, it's going to lower my net income number, unfortunately. It's not yet revenue, so I shouldn't be counting it as revenues. The third piece of information tells me that purchases of supplies during the year was incorrectly recorded to supplies expense. So I should have debited supplies instead. I put all of that as supplies expense. You discover that supplies costing $2,750 were still on hand at the end of the year. So whatever that total amount was that I wrote off as supplies expense immediately, all of that is not supplies expense. 2,750 is not supplies expense, it's supplies. So I need to move that into supplies. And to that extent, actually, my net income looks better because I had said this was an expense. It's not an expense, it's an asset. So my adjusting entry to correct the mistake will be supplies debit, supplies expense credit. We normally debit expenses, but in this case, I will credit the expense just so that I can correct the mistake. And finally, we borrowed $70,000 from a local bank on September 1st, 2024. The principal and interest of 9% will be paid next year, August 31st, 2025. No accrual was made for the interest. So $70,000 times 9% will be the interest for 12 months. We then have to multiply that for the relevant portion of time that the time that has passed from September 1st through December 31st. So September, October, November, December is 4 months. So 70,000 times 9% times 4 over 12. That's the amount that should be charged to interest expense. When you recognize an expense, it's going to decrease your net income number. If you look up over here in the formula bar, I have 70,000 times 9% times 4 over 12. That's how I came up with the 21,000. After I do all these adjusting entries, this number is the correct net income number. Net income number after adjustments is 90,650. So you've been asked to calculate the net income number. So they're just asking you for this final number, but you need to know how to arrive at this number. Go through each step closely and see which journal entry was not done or was done incorrectly. And if it was done incorrectly, then how do I adjust for it at this point of time? Again, we are concerned with the effect on net income. Revenues increase net income, expenses decrease net income. So with that, we are done with this exercise and you're ready to get started with your homework assignments.